With the geopolitical tensions on the rise, what does landscape now look like for international markets, and why does this matter for your portfolio? We will break it all down for you right here on UBS Trending. Hi everyone, and welcome to UBS Trending. I'm your guest host, Ainsley Carbone, filling in for Anthony. Matt McLennan is here from First Eagle to share some insights on international markets. Matt, thank you for joining us today. So there's definitely been a lot going on across geopolitical tensions right now. I mean, there's Russia and Ukraine, we have Israel and Hamas, and then on a side note, we also have an upcoming US presidential election. So with all this in mind, why should investors be considering international investing at this time?
At the end of the day, if you think back to each of those political or geopolitical developments, they had a lot of uncertainty around them. And traditionally, the right way to approach uncertainty is to consider diversification, because if there's any lesson of the last few years, it's been that it's been hard to predict with precision when and where these geopolitical issues will happen. And when I talk about diversification, I don't just mean in a statistical construct. If you look at the universe of investing opportunities, there are many very fine businesses that exist outside the United States. Why would you want to forego that opportunity? Some of them may even be beneficiaries of the kind of geopolitical tension we see. For example, if we see more onshoring of manufacturing, we're going to need factory automation expertise, and some of the best factory automation companies are in Japan. Alternatively, if there's risk to be priced in markets, for example, the concerns around China, you might find that that risk is actually better priced in Hong Kong than it is in certain US stocks that depend on China for their manufacturing. And finally, if we're thinking about looking to position ourselves defensively for a complex world, some of the best ways to do that are through sectors such as the international consumer staples, where we have iconic brands at much more attractive free cash flow yields. And the final thing I'll mention here, when we're looking at sort of the global investing universe, is that there's an opportunity in places that may not have been front and center, like India. And many of those staple companies internationally have strong market position in India, which could produce growth independent of the geopolitical situation we've discussed.
Thank you, that's helpful. Well, the US stock market has definitely become increasingly concentrated, I think, in a handful of stocks and sectors. So for those in the US who have that home country bias in their portfolios, it's definitely particularly important for them to look to that international investing to make sure they take that diversified approach. So can you speak a little bit to the international markets? I just spoke about the narrowness within the US stock market, but are you seeing similar narrowness in international markets?
There's been a degree of narrowness. There have been some of the narrative stocks in weight loss drugs or in some of the high price luxury goods segments, or even the semiconductor equipment segment, that have performed exceptionally well internationally, and that has been quite narrow. On the other hand, I'd say that we've seen more idiosyncratic dispersion amongst the international markets. For example, I alluded to the fact that many of the Chinese stocks have been very weak, or the Hong Kong listed companies, and so there's a fairly big discounting of names there. On the other hand, some Japanese names have been quite strong. So while we've seen a degree of narrowness in certain companies that have done well, there's also been some market-related dispersion, which gives you that diversification benefit. And there's always the opportunity to do something when you're looking internationally, because it's such a diffuse universe of companies and countries.
Yeah, definitely a lot to pick from. Now, US stocks have historically been pretty expensive. So can you discuss the differences in valuations between international markets and domestic markets?
So if we go back in time, there have indeed been periods where international markets have traded at a premium to the US market. And we sort of show this on a valuation chart here, where if you look back in certain historical periods, in particular if you went all the way back to the late 80s, there were big premiums in the international stocks. That's all reversed in recent years, and US stocks trade at a big valuation premium, in part because of the perception that the US offers more resilience. But as I mentioned before, the US doesn't have a monopoly on good businesses, and it won't always be in the sweet spot of the economic cycle. And so the ability to get higher earnings yields internationally means that if you're a long-term investor trying to plan for your retirement, you have better arithmetic investing internationally, the ability to grow your earnings at a measured pace by taking advantage of lower valuations. And it's not just in the stocks that trade at a discount to the US equity market today, But the US currency, if you look at a long-term trend, has been on a downtrend since the breakdown of the Bretton Woods in the early 1970s. And it's at the peak of its long-term trend range. And so if you're thinking about long-term retirement planning and you recognize that not all of what you consume is made in the United States, having some currency diversification at a time at which the US dollar is trading at a premium valuation is probably a smart thing to do. And what we've observed historically is in periods of a weakening dollar, international stocks themselves have also performed typically pretty well. So you have the benefit of potentially having cheaper valuations and cheap currencies internationally, which means you're being paid to consider diversification.
Perfect, thank you. And so we only have a minute or two left here. I'm going to shift gears just a little bit, but there's been a lot of positive developments recently in Japan, including pressure from Tokyo Stock Exchange on companies to become a little bit more shareholder friendly. So can you speak a little bit about how this has impacted your view and the opportunities that you see?
Yes, we've been long-term investors in Japan. There was a time back in the late 80s, there was a couple of years there where we owned nothing in Japan because it traded at such a valuation premium. But after decades of malaise, valuations got very cheap, and we had the opportunity to build some very meaningful investments in Japan. And what we've seen happen gradually over the last decade is a gradual shift towards better corporate governance. What do I mean by that? Higher dividend payout ratios, willingness to consider stock repurchase, and general efforts to increase ROEs. And as you mentioned, the Tokyo Stock Exchange has gotten behind this effort and encouraged companies to do that. And I think as that has been playing out, the combination of low valuations and improving governance have led to quite strong returns in Japan, particularly compared to neighboring China, which has been very weak, as I mentioned before. One thing I'll mention, though, is if you look at the performance of Japan over the last 18 months or so, a lot of the performance in local currency has been offset by currency depreciation. So many of the exporters in Japan have been beneficiaries of a weaker currency, but when you think in dollar terms, the performance of the Japanese stock market hasn't been that different. And so we still have, I think, decent valuations, a decent corporate improvement story, and the ability to find individual companies like the automation companies we discussed before for the long term in Japan.
Well, thank you so much for joining us today, Matt. A lot of really useful insights for those investors who are looking to invest beyond the US and add some international diversification into their portfolios. Thank you for joining us today. For more information, visit ubs.com/views. UBS Trending is on social media. Follow us on Instagram at UBS Trending for content that you will not find anywhere else. You can also check out LinkedIn, Facebook, X, formerly known as Twitter, for more information. And as always, if you have any questions about your portfolio, please speak with your financial advisor. Until next time, I'm Ainsley Carbone filling in for Anthony. Have a great day, and remember to keep your eyes on what's trending.